Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the bank stocks, and we're also going to look at a couple more stocks that are reporting earnings tomorrow. So tomorrow is going to be the start of the first quarter earnings here, and so we've got a lot of companies that are going to be reporting. Not a lot, but we have a lot of banks that are going to be reporting. So we're going to have Citigroup and JP Morgan and Wells Fargo as the big dogs, along with a couple smaller banks like First Horizon and First Republic and PNC Financial Services. And so, yeah, so first up, let's take a look, though, at BlackRock because they reported today. And so, yeah, like I said in my last video, if you watched that, BlackRock was super pumped up after hours by Kramer, saying how awesome the day was and how it closed up 1.5%, and it was really rocking, and wow, it was so awesome. But I'm not sure if you looked at this chart. Yeah, if you look here, it didn't get above 50 on our side. It has to break above 50. Fasto did heat up there at 62, and so the reason why I say that I wasn't impressed with today is because look at the upper wick on today's candle. It hit that red line there, which is the 50-day simple moving average, currently at 540.78. It hit that level and pulled back. It failed to close above. It also had broken above that dotted purple line temporarily, which is the middle Bollinger Band, it currently at 537.80. So it failed to close above both of those levels. And look how they drove it all the way down, just like all these other candles. Even though the markets were cruising today, right? It was a big up today. It just seemed like they were really pressing the shorts today, and it was a big short squeeze going on. Volume was not huge in the markets today, but everything was running. It was like a broad-based rally, and so banks were running, and BlackRock here, the first one to report, right, of this new quarter, and everybody's watching this to see how is this going to reflect on the rest of the bank stocks. And to me, this was a dud. I mean, it should have closed above that 50-day simple moving average. Why didn't it close above the middle Bollinger Band? Why did it not close above the 20 and 50-day simple moving averages if it had a good earnings report and things were looking rosy? This is not a bullish close. This signals that they were selling shares. This signals that the bulls drove it up, but they sold it off and pulled it. Look, it's still in the same pattern that it was in before. It hasn't even broken the previous pattern. Now the one theory that I thought of is maybe maybe they pulled it back today. I should have had XLF up here. Sorry, I just thought of that. But with XLF pushing today, maybe this is the pullback for the load. Okay, so maybe since tomorrow all these other banks are reporting and they're looking to break it out tomorrow. But I really would have thought that today, if it was going to be strong, it would have closed above that level. To me, this is a bearish. It was looks like a bull trap. It does not look good here for the bulls. I don't know if Jim Cramer looked at this or not. If he's he shows charts on Tuesdays, and then other day I think he decides to be a chartist when he wants. But this is not a good looking chart. Okay, so it's in a bearish downtrend. It's forming candles below the middle Bollinger Band. Until the middle Bollinger Band at 50-day simple moving average turn into support, the bears are in control, and it signals more downside risk. Look at the 100-day simple moving average. It's been holding this level. That's the gold line. So if it drops below 531, that's going to be your big red flag. It has to hold that level. You can see it's boxed in now, and either resistance is going to break or support's going to break. So tomorrow, if it breaks above this red line and you see it get above 540, that's going to be your big signal. Okay, yeah, this is really going to head higher. And the reason why I say that is look over here. It was below the middle Bollinger Band, and then once it got above the middle Bollinger Band in the 50-day simple moving average, that's when it ran. Down here, it's below the over here, it's below that 50-day simple moving average. It got above. That's when it really heated up. It got above the middle Bollinger Band, and that's when it made that nice run. So here it is. It's been failing to break resistance. Once it finally breaks, that's going to be the clear signal. But right now, the signal is the bears are still in control. You can see here, MACD, you want to see that bullish crossover on the 12, 26, and 9. You want to see that black MACD line cross over that purple or blue. I always can't tell what color that is, but maybe purple MACD signal line. And then you could see here that it is trying to cross over on the 8, 13, and 5 MACD, which signals early, but it's been crossing back and forth. And so, yeah, keep an eye on that 12, 26, and 9. If you look at the BlackRock 15-minute chart, and this is what I'm talking about, you could see here it came came up and it topped out today. You know, it hit this top, and then I call this an intraday double top. I know that people have different definitions for double tops, and maybe mine isn't correct, but to me this made a top. It came up, made another double top here. You know, that's a second top, a double top, whatever you want to call it. It topped out twice at the exact same level and failed to break, and it pulled back. And so now, being below that middle Bollinger Band, you know, that signaled downside risk. Notice how it tried to break back above into the close, and it failed to break it. I mean, this was not a bullish close. This signals downside risk. This was a risk to hold overnight if you were long. So I do not know why. I mean, if I was Kramer, I would have been more like, yeah, this was a nice day, but look at the chart. It for some reason, it sold off, and it didn't stay bullish. I mean, if BlackRock was going to be bullish, it would be up here above this dotted purple line. It'd be above 537. It would be above 540. You know what I mean? Why did it pull back? It reported earnings. Aren't earnings supposed to be great? It's supposed to be record earnings, and everybody's supposed to be killing it, and it's going to save the day. So to me, this is not how earnings season should have kicked off. You know, this to me was a red flag. Now, this is just one stock and one sector, you know, one company in one sector, and it's you know, could be an isolated incident. I just think that you know, to me, it was kind of a red flag leading into tomorrow. Now let's look at JP Morgan. JP Morgan did the best, in my opinion, from a technical perspective of the bank stocks today that I looked at. You know, it closed up 2.5%. It's back above RSI at 54. You have Fasto now back above 80. You know, it gets cooking when it gets up here. You know, the chart is signaling that it's heating up. Notice the bullish crossover here on ADX with plus DI crossing over minus DI or above ADX. Okay, so that's the signal the chart's heating up. The last time there was a crossover was back here, and you can see that was when the candle was here, and it followed with a nice run up to 118. And so, you know, everything's signaling here that the chart's heating up. So JP Morgan did close above resistance, and so this is what I'm talking about with BlackRock. So notice how this hit the green line, the 50-day simple moving average, and it closed above. You know, look at BlackRock. It hit the green line and it failed to close above. So to me, JP Morgan looks a lot better than BlackRock, and from a, you know, technically that people are thinking that JP Morgan is stronger. Now if BlackRock makes a move like this tomorrow and it closes above the green line, then it'll be bullish and it'll signal more upside. If the green line it fails to hold here, you know, if BlackRock fails to break the green line, that's a red flag. And then if JP Morgan stays above the green line here, currently at 112.68, then that's going to signal upside potential. So you want to see JP Morgan above 113. If it drops back below and it gets in those 112s again, that's going to be a red flag. Now as long as the middle Bollinger Band down here at basically 111, this dotted purple line is holding, it signals that this new uptrend is possibly starting. And so if these levels hold, then we'll be looking for a retrace back up to this 118 level. And so it's going to be really crucial that JP Morgan stays above this 50-day simple moving average and middle Bollinger Band. Notice how it came down and was holding that 100-day simple moving average as well, and it worked its way off of it and is pushing higher. This is what you want to see the other bank stocks follow, okay? Now that said, it did sell off into the close. Notice there was this sell-off. You know, it hit the high up here. They were pushing really hard. You know, I think they just had the, you know, yeah, I just felt like that they were pressing really hard and they didn't let up, and so it was just getting massive short covering with the, you know, especially with options expiration for anybody that had puts leading into this. And so, yeah, you know, because they pulled back yesterday. You can see the big pullback yesterday, and so people were thinking, oh yeah, it might pull back, and then they squeezed the people in puts today really hard all day long. They never let up, and then they pulled it back into the close. And so now tomorrow it's all about this 113.50 level, that the middle Bollinger Band. And so if 113.50 is resistance tomorrow and JP Morgan's trading below, that's going to be a red flag. If you see it trading above 114, this 114.40 level, that's going to be your signal, okay, yeah, it wants to break out higher. So 114.40 above signals higher, below this 113.50 level, that signals downside risk. The downside risk is that it drops down to that 50 and 100 simple moving average at 112. Okay, let's look at Citigroup. So Citigroup closed up 3% today. That was a huge move. Check out how RSI is back above 50. You know, notice how it's been struggling with this level. So you could see the prior, you know, the prior resistance levels here for RSI, and notice how this is where it's been hitting and failing to break. And so, you know, same thing for back here, and then it finally broke above, and that's when it really got cooking on the good run. And so that's what you're looking for here as well. You want to see RSI break this, you know, 53 to 55 resistance zone on RSI, and that, you know, if you see RSI get up into those 60s, that's going to be a good signal for Citigroup, signaling that it's really bullish. Now you know, it's pushed to this temporarily overbought level today with Fasto up here at 93. You know, check out plus DI down here. It's heating up. You want to see that green line cross over the red line. That would be a signal the bulls are taking control. And so this had a bullish close as well today, and it's comparable to JP Morgan. You know, it got above that middle Bollinger Band, and it also closed above the 200-day simple moving average. So this was a really bullish close for Citigroup. You know, so you know, I stand corrected. I mean, JP Morgan and Citigroup both had really nice closes today, and if it stays above the 71, 78 level, that signals more upside potential. Okay, so you know, as long as Citigroup's holding that 72 zone and staying above, we would look for a run up to the 50-day simple moving average at 73.36. That's the next big resistance level. Notice how it topped out at that level back in March. The 100-day simple moving average is just above at 74.29. So between 73.36 and 74.30, you know, that dollar, you know, that this zone here, it's going to be really tough to break. And if it gets hit, that could possibly signal the top of the run. Now, if it closed above both those levels and then turned into support, then it could head higher. Now, if it pulls back tomorrow and it drops below that 72 level, and you see it trading, you know, at 71.50 or below, that's going to signal downside risk, and it needs to hold that middle Bollinger Band currently at 70.20. As long as the middle Bollinger Band's holding, a new uptrend could begin. You can see here it had the bullish crossovers on MACD, you know, the PSAR bull flip, the green dots flipping below. You know, it's trying to push higher. It just has to hold that 200-day simple moving average. You can see it stayed strong all the way into the close here. So yeah, Citigroup was you know, this is a bullish chart. You know, it held EMA's 4.8 all the way into the close here. You know, it had this big volume spike. You know, where people you know, are they loading for the next push higher? You know, with earnings tomorrow, it's set up for it. You know, if it breaks above 73, you know, that 72.50 level, that's going to be your signal it wants to head higher. Now, if you see it drop below 72, like I said, that's lining up with EMA 13, which held all day today. A drop below that would be a bearish change in trend, or it would just signal that it's not ready to go, and then that 71.82 would be the big level. A drop below that level, and then that's where you could see it come down, test that 71 zone and that 50 simple moving average. Okay, let's look at Wells Fargo. So Wells Fargo closed up 1.5% today. Notice how RSI is way down here at 43, Fasto's at 64. It doesn't have as bullish a chart. You know, Citigroup and JP Morgan are much more rocking, but this is on deck. Okay, this is what we call on deck, and so you want to keep an eye on it tomorrow. The big level to break is 53. That's this dotted purple line. Notice how there hasn't been a close above this dotted purple line until you go all the way up here. Okay, so way up here in February. Okay, this is the last time it closed above. This is back when it had an uptrend going, the very end of the uptrend, and then it had the big gap down on the 5th of February. And since then, you know, every time it hits the middle Bollinger Band, it fails to break. Well, that's what it did again here today. It hit that middle Bollinger Band and pulled back. Okay, it's still below EMA 13, currently at 52.73. Now, if those levels remain resistance, it's going to signal more consolidation, not ready to go. It is trying to heat up. I mean, all these candles are forming in this zone. I mean, this is a heavily, you know, wound tight chart here. You know, if the earnings are positive tomorrow and you see it break above 53, the upside potential is it runs up here to this 300 and 200-day simple moving average in the 55 to 55.60 resistance zone. So you could see a nice, you know, $2 or $3 move to the upside on a break above that 50-day simple moving average, or a break above that middle Bollinger Band, the 20-day simple moving average. If that level did turn into support, it would signal the possible start of a new uptrend. Now tomorrow, if for some reason the earnings, the street doesn't like earnings and it has a negative reaction, if you see it drop back below EMA 4 at 52.44, the pink line, that's going to signal more consolidation, not ready to go, and you could see it drop back down down to 50. So that's the downside risk, is that 50 is tested if you know, so it's 50 to the downside and 55.60 to the upside. Okay, let's look for a WFC 15-minute chart here. You could see here it topped out, you know, it hit this resistance level from the 9th. You know, it came up and tested it. It didn't quite get to that level, you know, and so that was a red flag. You always want to see it make a higher high, you know, to break out higher, but that doesn't mean that the chart's busted. It pulled back. It still has an uptrend going. It has to hold this middle Bollinger Band at 52.71. If it can hold that level, that'll signal it wants to head higher. And then it's all about breaking this 53, you know, 20 to 53.30 resistance zone. If it can break out above that level, that's going to be a clear signal it wants to head higher. Now, if it drops down below, you know, and it starts testing these moving averages, you know, that will be a red flag. It bounced off of the 50 simple moving average at 52.39, you know, today, and so that would be the big level to hold. It's got to stay above these moving averages now for the chart to remain bullish. Okay, let's look at FHN. Closed up 1.3% today. So yeah, so this has a very similar setup to Wells Fargo. Notice how, in the sense that it's hitting the middle Bollinger Band. You know, the last close above the middle Bollinger Band was back here on the 19th of March, and then it dropped below, and the downtrend, you know, happened. It bounced off of the 200 and 300-day simple moving averages. They've been holding, and now it's right back at that middle Bollinger Band. So if it can close above 1901 and turn that level into support, then you're looking for a run up here to 1928, 1952. Once it gets above these two levels, that's when it could get running back up into the 20s, similar to back here when it got above the gold and the green lines. Then it ran back up to try to test these previous highs. You know, if it fails to get above this 19 level, that's going to be a red flag, and you're going to see that 200-day simple moving average at 1863 retested. You know, you could see here it did make a higher high, so this is good. This is what you want to see. You know, it made a high here on the 9th, pulled back, found support, and then it made a higher high and pulled back. So that's good. It just has to now bust above this high close here. If you see it trading above 1910, that's going to be bullish. Now if it drops down and you know, it fails to hold this middle Bollinger Band at 19, then you have these moving averages all lined up around 1885 to 1890, and then below that's that 300 simple moving average at 1880. Those are the big support levels to hold below. So it's all about breaking that 1910 resistance zone. Okay, let's look at FRC here. Okay, so this just closed up fractionally today. You know, this does not have a pretty chart. It's trading in a downtrend right now. You know, kind of similar looking chart to FHN, except for it's not at the middle Bollinger Band. It did close above EMA 4 today at 90.15. So you want to see it stay above that level, and then it has to get above the lime line. It hit that and broke temporarily, but failed to break that 90.50 level. Notice how these candles are you know, failing to break above the line. Once it gets above those levels, then you have EMA 13 and the 100-day simple moving average. You know, a break above, you know, if earnings go good and they like it, if it gets up in the 92 or above, that would be bullish. Okay, a 92 close or above, that would be really bullish. And then you'd be looking for a run up here to the 50-day simple moving average at 93. Okay, look at the FRC 15-minute chart. You could see it hit that same resistance level that it stalled out at on the 9th. It came up on the 9th and it hit the blue line. That's the 300 simple moving average. And then notice it hit that level into the close today and pulled back. You know, it's trying to break above this descending resistance line. You know, it has this, you know, it's trying to break above it, which is lined up with that 300 and 200 simple moving averages. So basically, if it can get above 990, that's going to be your signal that it wants to head higher. Now, it has to hold this 90-10 level. That's the 50 simple moving average. If it were to drop below that level, that would signal downside risk, and you could see it head back down to 89. Okay, let's look at PNC here. It did close up 2% today. Yeah, it's very similar setup as the last two charts. You know, it dropped below the middle Bollinger Band here. You know, it held the 100 simple moving average, the gold line, for multiple days. So this is a very strong support level, and now it's back at the dotted purple line. It's at that middle Bollinger Band currently, basically at 152. If it's trading above 152 tomorrow, that's going to be bullish, and then you're looking for a run up to this 154, basically 150. 55 level, the 50-day simple moving average. That would be the next target. If it did close above that 50-day simple moving average, now it could get moving and you could see it run back up into the 160s. Similar to back here in November, you could see it closed above the middle Bollinger Band and 50-day simple moving average, and that's where it got this big run going. Okay, so that's what you're looking for now, a break above the 2 key moving averages, and then it could get cooking again. Fail to break those levels, and that's going to signal not ready to head higher, more consolidation. Okay, if you look at the 15-minute chart, you can see it made the higher high as well, so very similar to FRC. Here's the high, made the higher high, and then actually closed above this previous high. So this is this is heating up. It looks like it wants to push higher. It just has to hold support and break through resistance. Yeah, keep an eye on it tomorrow. Very similar chart. I think it could, it depends on earnings. If earnings are good, now you know the targets. Okay, let's look at INFY. So those were all bank stocks, and I'm going to do a couple that aren't bank stocks just because they are reporting tomorrow. Closed up 3.8% today. It looks like they cooked it in already. Maybe it's going to push higher. There's a huge gap. Look at that giant gap up open today. And then you had the indecision spinning top here. If the candles do pull back, it's going to be all about holding that middle Bollinger Band and 50-day simple moving average. A drop below 1777 would be a red flag. If these levels hold, a new uptrend could begin, and then you're looking for a retest of the recent high close, which is up here around 1840 to 1855. This zone right here. The high close from January and the high close from March. Okay, so keep an eye on FNFY tomorrow. Notice how it had that gap up, and they ran it up here to 1820, and then they just then they just faded the rally all the way back down to where the open was. It closed right by the open, and so basically it has to get back above the top of this channel. If you see it trading above 1810, that's going to be bullish. If it drops below 18, that's going to be a red flag. You could see it drop down here and test the low of day from yesterday, and then the big downside risk is it comes down and tests that 50 simple moving average at 1776. Okay, and then let's look at PIXY. Finally, they report tomorrow as well. Did close up 2.5%. You can see here that they really walked this thing up leading into earnings. It's on a 5-day run already, and so sometimes when that happens, it's sell the news. So I would be on the lookout for sell the news tomorrow. But you never know. The news could be good and it could keep pushing higher. And if that happens, it's all about breaking this 380 level. You can see this was resistance right here, and then it's about breaking above this 420 zone. Okay, these candles right here above that's 460. And you can see the key resistance levels. So so you've got the 380, the for this 420 zone, just like around here in 420, that open, the close, and then the high up here around 460. Okay, but to me, with that long upper wick forming and then pulling back like that, it looks like be prepared for possibly sell the news. Today's candle did close above the upper Bollinger Band, and as you can see here, when there's closes above the upper Bollinger Band, the candles end up working back into the bands. It's happened every time. So the odds are the candles will work back into the bands. If you look at the 15-minute chart, you can see, it peaked out here at this 415 level, and then they sold it off. It dropped below the middle Bollinger Band, making it a risk to hold into the close. It has to get back above 386. The next big level to hold is that 50 simple moving average at 360. If you see it drop below 360, that's going to be a major red flag, and you could see it drop all the way down to 325 to test that 100 simple moving average. If you see it break out tomorrow above 410, that would be bullish. Okay, thank you very much for viewing this video. It's going to be a big day tomorrow with earnings. This is going to set the tone for earnings season. So we'll see how that goes. I think I should show you one more chart here real quick. Let's look at the XLF. Sorry, this is another long video, but this will give you a view of the financials, and so you could see here, they had a bullish day today. It had the this is the for those who don't know, this is the XLF Financial Select. This is the spider. This is a way to trade a basket of financial stocks, and so as you can see here, this had the close above that middle Bollinger Band today. So the close above 27. 26.76 was bullish. So tomorrow, if it can stay above 27.76, that signals more upside. And then what you're looking for now is a break above the 100 and 50-day simple moving averages. Above 228.34 would be really bullish. If they turn into support, it could head higher, similar to back here. And then you had the nice run. Got above that 50. You had the run up to here. Fail to break these levels, that's going to signal a temporary top. Now, if it dropped below 276, that would be a major red flag and a super red flag if it drops below that 2750 support zone. So if it breaks below EMA's 4 and 8, the risk is it comes down to that 200-day simple moving average. There was so much support here. It traded for so long. It has to break out here. If it fails to break out here and it drops below, that's going to be a major red flag after holding this level forever. So, for the banks and for the market overall, I think it's really imperative that XLF breaks above the 50 and 100-day simple moving averages and trades in above 28.34. If it fails to do that, I think that could be a major red flag for the markets and for earnings season. Okay, right? Because it's supposed to be record earnings, and this is supposed to be an amazing earnings season. And so if that's the case, then this should easily break above that 50 and 100-day simple moving average. If it doesn't, then that's a major red flag. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please check us out at our chat. I'll post the link below the YouTube video. You got to check out the premium chat. You can come check that out for free. Just when I come in there, I'll send you a link. I'll ask you if you'd like to check it out. Please say yes. I'll give you the link. You can check it out, and then you can decide from there whether or not you'd like to stay. Okay, thank you very much.